Nice green tea. So everyone, welcome again to Mango Monkey Learns Money. I hope you're having a good day and you're doing well. Merry Christmas to you. Now today we will look at this ETF which is called Ethy. This is an ETF listed on the Australian Stock Exchange with the ticker code being ETHI. It was established at the start of 2017, so it's run for about, let's say, I think now 4 years. So Ethy aims to track the performance of an index before expenses and fees that includes a portfolio of large global stocks identified as climate leaders that have also passed screens to exclude companies with direct or significant exposure to fossil fuels or engage in activities deemed inconsistent with responsible investment considerations. Oh, that's such a long description. Okay, so what are the benefits of Ethy? Number 1, align your investments with your values. Number 2, true to label. Ethy combines positive climate leadership screens with a broad set of ESG criteria, offering investors a true to label ethical investment solution. And the third benefit is diversified global exposure. Ethy holds a diversified portfolio of large, sustainable, ethical companies from a range of global locations. Sounds good so far. Now let's look at the performance quickly before we dig further and read a lot of this information on the screen. So if I go to Yahoo Finance and I type ETHI.AX, I will be able to go to the performance screen, and in here it will tell me that the year-to-date return is around 22 point something%, total return including dividends. If I look at the 1-year return is around 27, and if I look at the 3 years return is around 21%. Now you'll find out later that the majority of Ethy's investments are in the US stock market. So for the purpose of comparison, I will be comparing that to the SPY index in America, which tracks the largest 500 companies in America. If I go to SPY, I found out that the 1-year total return is around 19% and the 3-year total return is around 13%. So it looks like on face value, Ethy returns more compared to the largest index in America. That is pretty impressive. Now if I go back to the Ethy website, so the provider of Ethy is BetaShares. I can see that they have a management cost of 0.59%, so it's not that bad. Of course, it's higher compared to SPY, but I don't actually mind paying a bit more fee if I know that the investment is going to do well. At the moment, in December 2020, their net asset value is around $1 billion. That's actually a decent size asset value for an ETF. So it's not a very small ETF, it's pretty big. So it should be quite liquid. They pay dividends twice a year, and their biggest holdings are the following. From the biggest to the smallest, top 10 holdings: Apple, Nvidia, Tesla, MasterCard, Visa, Home Depot, PayPal, Adobe, Toyota, and ASML, don't know what it is. Their biggest sector allocation is information technology, representing 38% of their portfolio, followed by consumer discretionary, financials, and healthcare. Each of these three represent roughly around 15% of their portfolio. Their top 2 countries are America, representing 72% of their portfolio, followed by Japan, which represents around 8% of their portfolio. Surprisingly, I don't see Australia in here, so it must be very tiny. In the last 12 months, they have distributed around 10% of their assets, so it's a very high dividend yield. It wasn't always like this. At the start, they were quite light on the distribution, but recently they have been distributing quite a lot. So what's my take on Ethy as a millionaire, as an Asian millionaire?
Welcome back to Coffee Time with your host, the ex-Google, ex-Facebook tech lead. And today, I thought I would answer one of the most common questions people have for me, which is, why is it that I'm a millionaire as a millionaire?
Well, I haven't been someone who is very ethical, so I honestly don't care too much whether the company is ethical or not. I mean, I'm not the one doing the unethical activity. And even if I don't invest in the company, there are other people who will invest in the company anyway. So the company will still run the same way. It's not like my money is very big and I can actually make a huge impact. So for me, I just want to get the maximum return. Let me know if you think otherwise, guys. Would you invest in a company purely because it is ethical? And would you decide not to invest knowing that you get a lot of money if you do, but you know that the company is not very ethical, and knowing that even if you don't invest, another person will invest in that company anyway? Let's have a look at what kind of screens Ethy actually have in place. So eligibility screens are applied to remove companies which have exposure to the following activities. So gambling, tobacco, armaments, uranium, alcohol. I love my alcohol. Oh, junk foods. I love junk foods too. Pornography. I don't do pornography. Mandatory detention of asylum seekers. I mean, I don't actually know what asylum seekers mean. Is it just anyone who come here without a visa? Yeah, I don't know, because I know Australia detains people who are here without a visa. So if you're here without a visa and somehow the immigration department finds out, I'm pretty sure you get detained. I mean, the immigration department do not actively look for such a person, but if they happen to come across one, then I think that person will get detained. Actually, in Australia, when someone arrives here illegally as an asylum seeker, they are able to apply for a protection visa, refugee visa, and then they get a bridging visa until their application for protection visa is assessed. So during that time, they are actually not detained. They're free to roam around. But then after the protection visa application has been processed, if the government decides that they're not a real refugee, because there are many of them who are not real refugee, then they will lose the bridging visa and they need to go out of Australia. Now, a lot of these people decide to stay in Australia anyway, and they are here without a visa, without a bridging visa, without any kind of visa. So the question I have is whether these people are still classified as refugee, asylum seekers, or whether they are not asylum seekers anymore, because the Australian government has already decided that they are not a true refugee. Apparently, according to refugeecouncil.org.au, in Australia there is no independent review of the decision to detain, and people have been detained for increasingly long periods. The detention of people seeking asylum under this regime is one of the harshest in the world and causes terrible suffering. So does it mean Ethy doesn't like the Australian government? Alright, let's move on. We are off topic. So the next thing that Ethy doesn't like is destruction of valuable environment, human rights and supply chain concerns, and lack of board diversity, i.e. no women on the board of directors. So if no women, Ethy will not invest in that company. So the screening process is like this. So you start with a global large cap universe, and then you go down, you get to the climate leaders, and then you go down a bit further, you get to the socially and environmentally acceptable, and then the final group of companies is called the largest 200 remaining companies by market cap. So if I understand this correctly, Ethy invests in around 200 companies, which is the best of the best, out of the global large cap universe, which are climate leaders. And for Ethy to invest in that company, the company cannot sell alcohol and cannot sell junk foods. And both of those things are the things I love. So I don't care too much about being ethical, but I care about the total return, and Ethy has done better compared to the SPY 500 index in America. So Ethy definitely has a great total return. But I love my junk food and my alcohol. But before I said that, even if I influence my investment decision to either support or try to cause damage to the company, there will be another investor who will essentially invest in the company. So what I want to do is I want to actually support companies which sell alcohol and junk food. So I can perhaps do that by not investing in Ethy, but I know there is another person who will invest in Ethy. And at the end of the day, those junk food and alcohol companies will receive the same investment capital anyway. So from that perspective, I don't mind actually investing in Ethy. Let me know what you think, guys. Did you enjoy this video and what would you do? Thank you for watching and have a lovely day. Merry Christmas!